Well, while Bitcoin is doing its thing during the weekend, why not learn something, a new indicator or a new way to maybe predict or watch out how price action moves? Hello, Adrian, and welcome back to another episode of the Dang Oracle. It is 7:30 p.m. and welcome on this Saturday. it's yes, it's Saturday. It's weekend. Well, like I said at when we started out, uh, we don't really expect price to be moving that much during this the weekend, but who knows? Maybe Bitcoin will surprise us, and maybe it will do something completely different during this weekend. But so yeah, let's welcome first the hardcore crew that is here with me almost every night. Hi Cedric, hi Ahmed, hi Adam, hi Alvin, hi Zakar, hi Michael. Welcome on this Saturday. It's a little bit rainy for me outside right now on this Saturday. I don't know how things are at your place, but yeah, this is like the perfect weather to be just cuddling and just falling asleep. That's basically what this weather is the best for, and it seems to be the like that as well for Bitcoin. While it just keeps on ranging sideways. Let's take a look on some COVID numbers. Well, maybe some more people on this Saturday are going to be trickling in. Where's my chart? Where's my chart? There. Here's my map. Let's take a look. Hi, Ferdinand. Okay, so the US, we are at close to 3.2 million cases. Brazil, 1.8 million cases. India and Russia, it's getting near the 1 million right now. Let's take a look on how it looks on the chart. On the chart, we have over 12.5 million cases right now, and yeah, it looks flattening on the chart, but yeah, for the top 6 countries, things still look pretty bad. And yeah, Peru, Chile, yeah, everything looks pretty much the same. I've heard some stories about the US still not implementing, or still have people who are against using a face mask or something like that. I really, it's well, for me it's well, I'm living in Asia, so I guess things are, well, some people would call it less freedom, but I think it's pretty normal that you should be just using a face mask. I don't know what the whole argument is about, but apparently in the US, people think it is a constitutional right to be not wearing a mask, which is okay. Well, it's also a constitutional right to be, not spreading out diseases to each other. Anyways, hi Nikolai, hi Darren. So let's go into some technical analysis and go on continue update basically where we left off yesterday, right? So boom boom. Yeah, this is the short-term chart from yesterday. Like I said, feel a little bit like an oracle now. So yeah, we bounced off perfectly from this green box. I told you guys that most likely we will at least have a bounce towards this green box, towards the upside. I also said that I will be closing my long position, and that's basically what happened. I closed my long position around there, and then called it a night, and then that was basically it. Right now I am oh wow, 30% only from the customers wear a mask. Pledit. Wow. I'm surprised that you even go to work, man. You're just risking your life. That's pretty crazy. That's really crazy. But anyways, it just feels that it's such a huge difference between over there in the US and Asia, right? So I don't know. It seems such a huge discrepancy right now. Hi Zaldi. So yeah, close my long. Out of a position, and not really, like I said, as you know, you should be knowing already. I am not really bothered or caring that much to be trading during the weekend, but we can do some short-term analysis in a while, um, and take a look, or where do we think that, where things could be interesting. Let's put it like that. But overall, the last couple of days have been pretty good, right? So we had that beautiful rejection from here, beautiful rejection from here, went back all the way down here, closed below the EMA 200. Told you guys that that was another short signal. Went down to the green box here. I also said, yeah, don't be too scared for longing this green box here on the downside. We will have a bounce. Do we get a bounce all the way up here? Do we get a bounce up here? I have, you know, that's something that to be seen. But right now it seems to be pushing towards the downside once again more. But it's weekend. Don't be surprised that we get like I said, a wick down towards, let's say, 9,000 area or something like that. But also don't be surprised that we get a wick up towards like I wouldn't say 9,450, but I would say 9.4. I mean that's pretty possible as well. Yes, Agar. I mean I did short. I shorted from 9,450. I shorted from 9,250. And I longed from 9,120. That's basically what happened. So yeah, pretty solid the last couple of days in terms of you know, positions. Hi Mongol. But other than that, obviously I'm still in my swing short position. But like I said, I don't really care about that position. That one is going to be there for most likely a month or something like that. I'm just speaking about my day trading position right now, and yeah, I don't have any open positions right now in terms of my day trading account, because yeah, I don't trade during the weekend for my day trading account. Anyways, let's take a look on the weekly close on the CME. Right. That was basically what was interesting to be checking out yesterday. So this is basically how we ended the weekly candle close for CME. From the first look, it doesn't look that bad. We still closed obviously above the EMA 21, but we got rejected basically on the 10 simple moving average towards the downside here. So does this look like a great close? Well, not really. Well, let me explain you why. Well, usually what happens is we have a downtrend here. We have a small bounce, but this bounce got rejected in the middle, as you can see here, in the middle of the previous green candle here, right? So that's not really that usually happens only when the market is not very strong. So usually when we see this type of pattern where we basically go back to the after a few down candles, a push back up, but then a rejection at around the middle of the previous body candle, of the previous green body candle, that usually means a continuation of the downtrends in the next week. So that's a little bit of candle theory for you guys, so that you can check it out. That you can think about, right? So for me, this looks like a continuation downtrend candle for the next week, a small bounce for the upside, but most likely continuation next week, over the next week. Just taking a look on the daily candle. The daily candle was a lot less bullish. As you can see, we have a small dragonfly candle, but the problem is, so the previous daily close, we closed below the EMA 21, and now we basically confirmed and closed below the EMA 21 again. We did close above the EMA 55, as you can see here at the green. So it's not that tragic or not that bad yet, but it does once again show more towards the weakness side rather than the strength, right? And also, well, the most important thing is we can see that we closed the CME at 9,275. So that's basically around that area that we can expect spot price to be opening on Monday or during the weekend as well. So if we deduct the premium around $50, that's the difference between the CME chart and the spot price, around $50. So around 9.2K basically is what we are expecting for this weekend to be ranging on, right? So can it go $200 towards the downside, like 9K? Of course. Again, it goes $200 towards the upside, of course. 9.4K, that's possible as well. But looking at things, as you can see, pretty much around the 9.2K area is what we are seeing right now. Although I it looks quite weak right now in the very short term, I would say. So most likely I think we're gonna most likely be swiping the downside a little bit one more time before we go back up, and maybe go back up a little bit higher. But yeah, I don't really have an opinion or care about that, to be honest, because it is a weekend. The only thing that I will be doing during the weekend is basically that's what I always do, because my bias is still towards the downside for over the next week, right? So what I'm gonna do is I always put like some I call it scam order or spoof orders on the very high end that I don't really believe it will hit, but if it does hit, it's just very easy to be managing your risk, right? For example, I put some short orders here at like 9.4k, which is basically here on the top trend. Do I really believe that it will hit the 9.4k? Most likely it's not going to hit there, but if it does hit there, well, like I said, the risk management is very easy, because most likely if we do break and close above this green box, most likely we will have a trend towards the upside. So that's what I mean with like sort of like scam orders. I don't really believe that it will be hitting, but if it does hit, well, you know, it's easy to be managing your risk. So it's not really trading, it's more like a lottery ticket, and if it does hit, it hits, right? That's basically how I look at it. But I'm not really like, you know, trying to get into a position or anything like that. The only thing, if during this weekend and we do make a lower low, then I will be of course entering my position. But other than that, I don't really care right now what the price action is. I think it's gonna go mainly sideways, and usually during the weekend we don't have the volume to be breaking a macro trend anyways, right? But anyways, I wanted to explain also that although I am of course more biased towards the downside right now, we have to make a very big differentiation between short term and mid term, right? Okay, what do I mean with that? So on a daily basis, I'm a day trader, right? So on a daily basis, I'm giving you updates on every day on this. So I look at shorter term charts, because if I would just be swing trading, maybe I only would have a video maybe like once a month or something like that, or I would be just saying like, yeah, I'm in a short and it's gonna take a month or something like that, right? So it wouldn't be very fun. But that's the problem with when you're giving out content on YouTube. It's like people are like, you know, but you said that it was going to go up, and then you said that it was going to go down, and then a lot of times, obviously, if you're day trading, you will be getting stopped out. But the most important thing is, like I keep explaining, being stopped out is a normal part of day trading. It's just how it is. Nobody can be, you know, perfect trader all the time. But the most important thing is, of course, your risk management, and that's why in the long run you should be making profits. And that's why I'm keep saying that your P&L is what matters, not really anything else. But anyways, I just wanted to show you guys the scenario, right? The scenario is the following, right? The scenario is the following. Let's say we are bullish and we do break out of this triangle here. Let's say we break over, and like that's something that I keep saying. I will take a long on my day trading position, but I will still not be long on my swing trade position until the macro trend has been reversed. What I'm trying to say is, okay, let's say we close a daily candle or a 12-hour candle above this green box here. Most likely we will be going towards this side here, right? We will most likely be going towards, let's say, even 9.9k, right? But if you then zoom out, right? If you zoom out perfectly, if you can zoom out, then price would be exactly here, right? Let's say it goes all the way there. But if you zoom out, you can clearly see that we would still be in this macro pattern, right? In this macro pattern of a macro trend, right? So the whole structure, even though we moved all the way up to 9.9k, is still not broken, right? And that's basically what I'm trying to explain as well, because it really depends on you what type of person or trader or investor that you want to be, right? There are people who only swing trade. There are people who don't have the time, like me, for example, to be sitting in front of their computer for 12 to 14 hours a day, right? Which is perfectly normal. Yeah, I am one of the few people who who enjoy doing that kind of stuff. But I understand that there would be a lot of people that don't enjoy or don't like that kind of stuff as well, right? They prefer to do other stuff, which is completely understandable as well. Hi Gita, hi Carl. Um, yes and no, Pledit. To be honest, you can actually make a decent amount of money, even if it's just a 1 or 2% movement on Bitcoin. It's still a substantial amount if you tally everything up. It's just a matter of, like, well, what is a lot, right? What is a lot, and also what are you expecting, right? Expectations are different from person to person. Anyways, what I'm trying to say is, like, okay, if we do break up out of this channel and we do move up towards this green box, towards the upside, it does not break the medium term or the macro trend, right? So hold your horses. Like I said, things are not going to be changing, until we finally break out of one of these patterns, right? But of course, my bias is more towards the downside than the upside, because, well, I think it's very logical, right? We are grinding towards the downside of the channel, not towards the upside of the channel. If we were keep grinding up on this top side of the channel, I would be more inclined to be bullish rather than bearish, right? So, but does that mean that we cannot be breaking towards the upside? Of course we can break towards the upside. There's actually a couple of things that still say that there's a possibility that we're breaking up the upside. But the problem is, like I said, for me, my bias is more towards the downside, because we keep grinding. As you can see here, we keep grinding here on this area here, and it looks like, oh, it really looks now that momentum is and the trend is shifting towards the downside. Another thing that I wanted to show you guys is the following, right? So if we are looking at the daily trend right now, we can see like some forming like this, right? We have a nice up in our channel, then down, then a nice higher high in our channel, and then we have like this sort of like slow grinding towards the downside, right? And it's exactly what the same pattern that we are currently seeing also on the 4-hour chart, because if you are looking at the 4-hour chart, this is the channel that we have been forming since what was it, since 27th of June. So yeah, like 2 weeks already also. So we have this move towards the upside, then we went down, then we have a higher high, as you can see, and then this is kind of what I'm expecting as well. It's very similar to on a daily chart, where we are slowly going towards the downside. So it would not surprise me that we do something like this, right? Slowly, and then we break down from this pattern. So keep always try to keep things into perspective. Like I said, when I'm talking about short-term movements, it doesn't mean that the midterm or the macro term trend changes at all, right? So like I said, whenever the price moves like $150 or $200 to the upside, don't be too bullish. But on the other hand, if the price dumps down towards like I said, I'm pretty confident that when people saw this move a couple of days ago, from this end, from this end here towards this end here, I'm pretty sure a lot of people were very, very bearish and not thinking too long on that spot. But for me, it was like, it's just a normal thing for me to be at least trying to long that spot, as long as we see that there's a sufficient amount of support to be backing it up, as in on a technical level, and of course on an on-chain level, with looking at the heat map, right? For example, is one of the indicators that we can use to be seeing, is there a lot of support or buy orders on that spot. But of course, on the technical areas is the most important one, where we can just see that everything was so oversold, so a bounce was likely to be happening. And that's basically what we are playing when we are day trading, not when we are swing trading, of course. And that's the reason also your stop losses or your risk management for day trading accounts should be so small, because you should be in and out, on a pretty much on a daily basis. So take lower risks when you are day trading, and take higher risks when you are swing trading. That's basically the whole idea and the whole plan, right? So what are we looking at right now, right? So since that I don't really expect that much action during the weekend, I wanted to explain another indicator that I've used. Well, not that much anymore, but I still use it sometimes, basically to see what the current trend is, right? And it's called the ADX indicator. It's that stands for average directional index. It comes from the stock market, so there is some adjustments that I've made on it, and I will explain or I'll tell to you guys what I changed that a little bit. So it's this indicator on the bottom side here. First of all, I'm gonna remove the other indicators, the directional indicators, the direction minus and the direction plus. I just want to show you guys and explain this first. This is the ADX indicator. So what does the ADX show you? It's a trend indicator. What does that mean? It doesn't give you any direction, right? It doesn't give you any direction. It only gives you trend, meaning and this is basically the level 20. If you can see here, if it's below 20, then the trend is very low or very weak, right? There's no trend. That's basically what it says. So below 20, what usually happens is either accumulation or distribution, and we can clearly see that, right? So for example, here we had from the 2nd April to the 22nd of April, and we can see on the price the 7th of April here until the 22nd of April, which is here, this order block here. Let's make it order block from the 7th of April. We can clearly see here until the 22nd. Yeah, this order block here, very range, very low volatility. It just basically goes sideways, right? So a lot of people, when the ADX is below 20, first of all, in the stock market, they're using 25. I've adjusted it to 20 because it just works better for crypto. So you can back test it, but the official theory is 25. But for me personally, I adjusted it to 20 because it just works better for cryptocurrency, and it just works better for trading in general. I've noticed. I mean, that's my personal back testing. Once again, that's the difference between most of the time between a cryptocurrency trader and a traditional market trader. I use basically most of the basic theories from the stock market, from the traditional markets. For example, all the theories that you know, right? For example, using RSI, using ADX, using Fibonacci and stuff like that. But I adjust it a little bit, a tiny bit, because I do believe that there is a difference between trading cryptocurrency and trading traditional markets. Very similar. For example, I'm using the EMA 55 rather than the 50 in comparison with the traditional market. So I think it's important that you make the correct adjustments, because the game, I call it the game, but the game is the same fundamentals, the same game, but it's played a little bit different, right? So you can compare it with playing any sport, right? It's the same fundamental, the same game, but you just have to adjust your strategy a little bit. For example, let's say you're playing football 11 against 11 on a big field, or you're playing 5 versus 5 football on a small field. Of course, the fundamentals and the game is exactly the same, but you will be using different strategies to be trying to win the game, right? So that's a little bit the same as in trading, right? When you're trading crypto, I do adjust my game a little bit differently when I'm trading traditional market. So once again, what I'm showing is my own personal viewpoint on using these indicators, not the correct fundamental way. So if you're reading out in a book, they will tell you ADX is 25, but when you're listening to the Dang Oracle, he will tell you use 20. That's basically what I'm saying. Okay, so before I get like comments or hate that I don't have my fundamentals, or I don't have the correct, I'm not using the indicators correctly, I use it differently, a little bit differently, because I adjust it towards what works best for what I think works best for me, rather than close-minded people who always think, okay, it has to be like this and you have to be using like this, these are the strict rules. I'm not that kind of person. I adjust and I see when it works better, it works better. I am progressive, I guess, on that area. Anyways, enough ranting about that. So once again, below 20, it is a either accumulation or distribution. And well, you can clearly see right here, this is accumulation because, well, afterwards we have a giant rocket ship towards the upside, right? As you can see, we have accumulation here, and then it went towards the upside. And also you can then also see that the ADX spiked up, and that means that the trend is becoming stronger. But once again, it does not tell you the direction, right? It doesn't mean because this is going up that the price is going up. It just means that the trend towards that specific side is gaining momentum and getting stronger. Once again, then the momentum is fading away, as you can see right here. And then we have once again a very long block once again with the ADX below the 20 mark, right? And as you can see on the price as well, during that period the price basically went sideways once again. So like I said, for people who are swing trading, they use the ADX quite often, because when ADX is below 20, they never put themselves in any position at all. And that's a good strategy, to be honest, because, well, when the ADX is below 20, you kind of know that the price movement is not going to be very high, right? So for swing traders or long high time frame traders, they will just be sitting out, taking holidays, and not doing anything at all. So once again, it is an indicator that can show you, like, basically, if there's a strong trend or a soft trend. Okay, once again, was this accumulation or distribution? Well, this is more distribution now, because why? Well, we can see that afterwards the price did go down more towards the downside than the upside. But as you can see as well, the trend was very, very weak. That means that's the reason why the downward trend that we have is on the weaker side or the lower side as well, right? So that is basically how you should be interpreting and how you should be using the ADX indicator. Okay, but other than that, we can also do this very same thing with the ADX as with the RSI or MACD or anything like that, and that is looking for divergences, right? So when we are seeing that the price, for example, is going up and the ADX momentum is fading and going towards the downside, we have divergence, bearish divergence, right? Higher high versus lower high. So it means the momentum is fading, and most likely we will have a push towards the downside rather than the upside. And that's also, once again, one of the reasons why I still think that we have more downside to go first, because as you can see here, during this whole period, we have quite a substantial amount of divergence. And we did go down a little bit, right? If you take a look at this price, that's the downtrend that we are currently experiencing, basically from like what was it, 10,000 here, 10,400 area, and now we are at the 9,200 area. So that $1,200 move, that's basically what we are seeing right now. So divergences, you can also look up on the ADX as well, works pretty well as well, because it's a trend indicator, right? So as you can see right now, we are currently almost curling once again below the ADX is currently at 23. It's almost going below 20 again, which means, well, it's not going to be pretty because it's also weekend, and yeah, it's going to be a very slow trend towards the downside, except if we see this ADX, of course, spike up back towards the upside. And then we kind of know that there will be some sort of a bigger move upcoming, right? And we can backtest that, of course, right? Like as you can see here, ADX for a period below, we have accumulation or distribution, and then it spikes up, so it means momentum is moving. And then you can see, like I said, there's no direction implied, can be to the upside or can be towards the downside, right? So you can backtest and check it out, right? So that's the ADX indicator, so it just basically shows you the trend. But how about direction, right? You want to be having a indicator that also shows you probabilities towards the direction rather than only the trend. The trend is already something that is important, but you want to know some direction as well. So that's why we have the directional indicators, the plus and the minus, right? So I'll add it to it now. So the plus and the minus is quite easy to be understanding as well. It's actually a moving average of basically the opening, the lowest price, and the moving averages of the highest price. So it's an average basically of the tops and the bottoms. And how do we play this? Well, we play this as the following, pretty much like any other indicator. We are looking for crosses, right? So whenever the cross between the green, which is the bullish one, or the high prices, when we see the green crossing above the red one, that means a bullish signal. Okay, because but then because we have the ADX, we also know if the momentum is there as well. So we are basically comparing the two things, right? So here's a beautiful example. We have a crossover from the green over the red, which means a positive price movement. But the problem is, at that point in time, as you can see, the ADX is very low. So it means the momentum is really not that much there yet. So although it is a positive trend towards the upside, then we basically don't have a very big move just yet. The big move is when we have the ADX going above the 20, right? And when the green is above the red, of course, right? So around this area here, we can see that the momentum is going very, very high. So this would be around the 29th of April, we should see a spike towards the upside, right? And as we can see here, this is basically the big move towards the upside. Yeah. Okay. So basically, it's a combination between both, right? And then the opposite happens as well, right? When the red line is crossing above the green line, which means the bears are in power, right? And as you can see here, we have a crossover from the red above the green line. However, the momentum, the ADX, is very, very on the low side, right? So when we see on the 24th of February, we do see that we do see a push towards the downside, but it's not that substantial, right? It's not that substantial. But when all things align, when the red is above the green, and we have the momentum, the ADX flashing or going towards the upside, that's when we have a huge move upcoming. So of course we all know that was on the 7th of March that we got this major move towards the downside, right? So maybe we can do another example where we can see, oh, here this is a beautiful move as well. Momentum is here quite high here, and the green is above the red, right? So around the 10th or 11th of January, we should have a move towards the upside, a nice move towards the upside as well. And you can see here from the 10th of January all the way towards the 19th of January, we can see that we have a nice move towards the upside as well. So yeah, that's basically how you should be or looking at the ADX and the momentum, the trend indicator. So yeah, So yeah, what are we looking at right now? Because we can immediately use that that information, right? That we've just learned. We can clearly see that right now the red is still above the green, meaning the bears have still more momentum than the bulls. However, as you can see, the ADX is on a very low level, meaning the drop that we are currently experiencing is on the very slow end. But once this for example, moves towards the upside, for example, and this strength, I mean, this divergence between the red line and the green line becomes, further away from each other, that's when we will have a big correctional move. Other than that, what also can happen is, of course, we could have a crossover where the green is above the red, and then the red goes down, and then this ADX moves towards the upside, and then we will have a very big bullish movement towards the upside. But right now, also with the ADX or the trend indicator, we can clearly see that the bullish the bearish momentum is still stronger than the bullish momentum, with the red line still being above the green line. Okay, so yeah, that's basically the whole explanation on the ADX indicator. So I hope that you've learned something from that as well. Which stage are we? Well, that's the big question, right, Christopher? Is this accumulation or is this distribution? That is that is the golden question. Like I've explained before, for me this looks more distribution than accumulation, but you could actually give other ideas. Let's put it like that. Some people can give ideas that this is distribution. Some people can show ideas like me that this is some people can say that this is accumulation. Some people can say that this is distribution. We will really not really we cannot be 100% sure. Let's put it like that, and it will only happen, and then we basically can know. Yes, Nikolai. So the ADX only spikes to the top. So the higher the top, the higher the spike, basically the stronger the trend. So if we get a small spike, for example here, right, we can see here we have a very small spike here. This here from the 26th of June, and we will see on the price, because the red line is towards the higher than the blue line, right? You can see here on the 26th of June we do see that we have a push towards the downside, but it's not as strong, right? It's not as strong. So the ADX will just show you the strength of the movement, basically, right? It's basically just a trend. The stronger the trend, the stronger the movement. That's basically it. Okay, I guess that explains the ADX indicator. Let's move into well, we have our 12-hour candle close, so let's take a look on some expected moves. But before that, let me take a look on the 4-hour chart first. It still looks rangy on the RSI. But we do the momentum, even on the short time, the momentum is fading already, because we can clearly see here that the 10 simple moving average is crossing the 21 moving average. So that's not a good sign even in the short term. Doesn't mean that we cannot retest a little bit higher to like 9,250 or something like that, but I do believe that more than likely later during the nighttime we will be going towards the downside rather than the upside. Okay, let's take a look on the expected move charts to be seeing if we can get some more information. So expected move chart is saying first standard deviation towards top side is 9,306. Does that break anything? Of course not. 9,300 would be actually a nice position to be entering a short, I think. So for me, let's see if we get there. But on the other hand, the first standard deviation to the downside is 9,128. Does that change anything in the macro level? Of course not. That would be just once again, like I said, I do believe that it's more likely to be doing that, swiping one more time towards the downside here, and then afterwards pushing back up once again, and then Sunday Sunday maybe pushing a little bit up higher, and then break down from there. That's basically what I'm expecting. But for now, that's what it's saying. The Stokes on the 12 hour, as you can see, is curling towards the downside. That's obviously not the best. And as well on the RSI, we are currently still below the EMA. We will be only crossing up if we close a candle above 9,250. So that's basically the area that we'll be looking at. But do we go, even if we cross up, do we go very, very, very high up towards the upside? I highly doubt it, because it's weekend, right? Let's take a look on the daily. The daily Stokes are still looking pretty good, but as you can see, it starts to show a little bit of momentum decrease. So yeah, that could in the next couple of days could prove pretty bad. On the RSI is already below the EMA right now. That's not good, of course, for the daily. Let's take a look on the 4 hour. 4 hour Stokes is already curling towards the downside right now. It's already trying to cross towards the downside. Yeah, I'm more confident now that we'll be swiping the 9.150, 9.120 ish area most likely once again. I doubted that we'll break the 9.1k, but who knows. But that's yeah, it just shows that most likely a small push towards the upside and then break down once again. That seems the most likely scenario for even in the short term. But not trading it or anything like that. I'm just waiting it out. Like I said, I just put some scammy positions at like 9,380, 9,400, something around there. If it hits, it hits. If it doesn't hit, well, it's a lottery ticket. That's basically how I'm looking at. And then we will make a final battle plan tomorrow to get ready for the monthly, for the week. That's basically how I'm setting up trading. During the weekend, I only do some analysis, but I rarely I will be trading, except if some macro structure breaks, and then of course I have to be in it, and I have to be taking my position. But it just happens very, very rarely, right? Anyways, let's take a look on the traditional markets because that has been a crazy ride, right? Let's take a look at Nasdaq, and Nasdaq is like at all-time high. It closed at all-time high, 10,843 right now. And like I've explained before, I don't know. When I said that, I do expect us to go to 11,000 and actually break the 11,000 before before anything. To be honest, that was the inverse head and shoulders measured move that I've been looking at. So yeah, I think we will have I think we will have a 11,000 Nasdaq before anything, before we see some strong retracement. Does that mean that we won't have some pullbacks? Of course, we'll have some pullbacks, and that's a little bit the problem, right? That's a little bit the problem. Same pledit. Tesla, I'm still holding on to my Tesla. A lot of people think Tesla is going to be crashing very soon. I don't think so. I still think that Tesla has more space or more room to go up. I've been watching it also on a daily basis. I have Tesla at like I think most of my shares is like $450, and it's like over 1,500 right now. So it's already triple the price of my shares right now from Tesla. So I'm pretty happy with Tesla right now. But I still do believe that it has more strength to be going up, and that's why I'm looking at Nasdaq. If Nasdaq keeps on going, because you have to understand most of the top stocks are forming the Nasdaq, right? So that's what pushing everything up. It's very similar to Microsoft, very similar to Apple, and so on. To be honest, so yeah, still looks pretty good for Nasdaq, and I know a lot of people are starting to feel like, and yes, I do believe that we will have, let's say when the market opens, I do believe that we might get a pullback back to the 10 simple moving average or something like that, and that's basically what is going to be pushing Bitcoin very, very low down. But overall, in the macro trend, as long as no, like I said, as long as not some structure breaks, then it won't it will be fine. Tesla pops. Yes, I mean, if we get the pullback, it's going to be a pullback, you know. So it's going to be a pullback. So yeah, of course. But I think the pullback is August. I think August is more the time that we should be more worried about the pullback. Although I've been monitoring the assets as well from the FED, which you can see here, and then you can see that since the 10th of basically the third, since the beginning of June, the FED has been dumping their total assets, and it has been going down on a weekly basis right now. So the FED is actually putting their assets down, meaning that will obviously give a push towards the downside on Nasdaq and so on. But the problem is right now the retail FOMO is insane, right? I compared this this moment with when I was trading Bitcoin in 2017, right? If you remember in 2017, let's go into our chart. In 2017, we all know in 2017 we had this crazy run from basically what was it, $1,000 all the way up to $20,000. So when we get this kind of parabolic run, and it's exactly the same that we are having right now on the traditional markets as well, right? So we do get our pullbacks, you know, as you can see, even during bull runs, we get substantial pullbacks, right? Like you can see here, a nice 30% towards the downside, and so on, right? We do get, even in bull runs here, a nice 40% pullback, you know. So we will get that 30 to 40% pullbacks, but overall, it is a macro trend towards the upside, and I think that's pretty much the same what we're seeing right now in like Tesla and in the stock market. We and yeah, at one point, for example, we were at this point here, we were thinking, yeah, this is really the top, it's going to be crashing down, but then it went back up higher, and then we were at like 15,000, and we were thinking, yeah, well, this is the top, it's going to crash back down, and then we went to 20,000, and then finally we did break down from the 20,000, as you can see. But the only thing that I'm trying to say is, until I see actual breakdown of a structure, of a you know, a strong macro structure that is being broken down, only then I'll be, you know, and it's quite easy to be seeing, right? Once we start breaking, we can clearly see on the slope on the weekly, on the 21 moving average, for example, when the slope starts curling towards the downside, or the price starts to be closing on the weekly below the EMA 21, the fun is over. The fun is over, right? But those are basically the things that we have to be looking at, and right now, to be honest, yeah, I mean, just take a look on the weekly. We are above everything. We are above everything. So is this the end? I don't think so. I don't think it's the end just yet. But you know, at one point it's going to make that pullback. At one point it's going to make that crash, and it's going to be substantial. Yes, it's going to be substantial. But on the other hand, we are so high right now. Doesn't mean that we will go back all the way, you know, down towards our previous crash, towards the previous era. I don't think so. I think that was the dip, you know. I think that was the dip. I don't think we will have those kind of prices anymore. Do I think that we can pull back to somewhere like here and then move back up higher? Yeah, sure, right. And when we do this pullback, people will be very bearish, and people will be crying, and will be you know. But I'll be buying. You know, at that point, I'll be buying. At that point, so yeah, I still think we have more to go towards the upside. My targets for the Nasdaq is around 11 over the 11,000 first. That would be the measured move of the inverse head and shoulders that I've mapped out, and then we'll take it from there. But we'll see. I'm actually in a short position also on gold. Yep, since yesterday actually, because I do believe that gold is actually has a more toppy structure right now. Although I'm still macro bullish on gold for over the next couple of months, but I'm just playing a small short position because I do think that we will have a small pullback to like a 1750 ish area or something like that. A small pullback on the whole market because. When the stock market is doing really well, it's very similar to what we are looking at. The money flows into where you make the most money, right? So as you can see here, from Bitcoin, well, from Bitcoin, cryptocurrency industry is flowing into stock market right now. The money is going into Nasdaq right now, as you can see, right? So very similar. Money is, I mean, I'm not bearish on gold at all. But money is just all the money is just flowing into this traditional market right now. Do we think we can break 11k? Maybe, Christopher. Maybe if we break 10 point, if we break the 10k level, then most likely if we break 10k, I mean closing a daily candle above 10k. 11.5k is very realistic. 11.5k, if we close above 11.5k, 14k is very realistic, to be honest. So yeah, could be bullish, but like I said, I still expect us to make a nice pullback before all of that. And this is basically the triangle, right? I've done the long-term analysis before already. I don't know in which video I've done it, but this is basically what I'm expecting. If we break above this one, yeah, most likely 14k. If we don't, we make a small push back towards the downside, and then maybe later next year or something like that, we push above out of it, or we try to break this resistance once again, and then things will be okay. It's just a matter of patience. But yeah, I'm a day trader, so you know I don't really care about that much about the macro perspective. The only thing that I care about, why I would be caring about the macro perspective, is just for my holding portfolio. The holding portfolio that I have, of course, you want that to be profitable, right? You don't want to be investing in something that is not profitable. But yeah, no real danger or hurry on that area. It could take 2 years, it could take 3 years, it could take 5 years, who knows, right? Why? And that's the reason why I'm not that pressured about it, because well, should be trying to make money on a daily basis, not not over 5 years or something like that. Anyways, Nikolai wants to see some Link. Okay, let's take a look on Link. So Link did top out here, but I mean, this looks very constructive, right? This looks very constructive. Looks pretty good to me. Weekly, we are in the price discovery modus right now. This is all-time high, so it's very hard to be doing technical analysis on price discovery. But this looks very constructive. This looks like a nice flag, and more likely to be continuation rather than anything else, right? So for Link, but how far will we go? I think we've done the Fibonacci extension already on that, right? Let's do it one more time. What the Fibonacci extension was. So let's take the magnet so we don't so here 6.766, but we kind of are very near that area, right? So this area here, we're very near that area there already. So when we would be reaching that area, so let's say we make a small bull flag here, right? It's a lot of ifs once again though, but like I said, it's very tough to be charting something that is in price discovery mode right now. So we could have something like this, and then it breaks up towards this this area. But I would be already start to be very careful. But if we do break above that green box once again, then the next target is over here, right? The 1.6, my favorite, the 1.68 1.618 FIP ratio at around $8.5. So could be really good, that area. So but let's see, daily it still looks good. I have no problems or no issues with the daily for Chainlink. Let's take a look on the in the 4 hour. Yeah, 4 hours looks pretty good as well. It's just flagging out, as you can see. Flagging out looks pretty good. But once again, you have to be very, very careful with altcoins, because if Bitcoin crashes, or if Bitcoin gets dumped towards the downside, then everything is going to get dumped to the downside. So although the chart looks positive, it can change very, very quickly if Bitcoin dumps. And like I said, I do expect Bitcoin to be dumping over the next week or something like that. So I would be very careful with alts. That's basically it. Let's take a look at Atom. Let's take a look at Atom. Atom USD. Let's take a look on Atom on Coinbase, I guess. Oh wow, looks very, very good. It looks very similar actually to Chainlink, the formation. But let's take a look. Well, wow, RSI it's indeed very, very high, but very similar to Chainlink. I don't think this is. I don't think it's. I think it has a little bit more to go towards the upside before the downside as well. Very similar to Chainlink, I think. So I would take a wait 1 second. Like look here, we kind of have that resistance area here. So this is a main resistance area, right? We can clearly see that this is the main resistance area here. So, but the thing is, it kind of looks like it wants more, right? Wait, let me remove this one. It kind of wants to more. So I would be saying that if we get one more push, this is the green box I would be looking at, like between 4.7 4.8, I would say around 4.8 4.8, yeah. So just a quick look. I'm not saying it's a bad short. Very overbought, but if Bitcoin, so basically if Bitcoin ranges and keeps on ranging for like the next week or something like that, most likely this is going to be going up more rather than down. But if Bitcoin crashes, then you're having a very good short. you would be having a really good short if you shorted here at $4.4 there. But purely just looking at the chart itself, it seems like it still has some power towards the upside rather than the downside. And you know that I don't say that very often about shitcoins or anything like that. But like I said, if Bitcoin is ranging, altcoins projects are gonna be people are bored, man. People are bored, so they will put their money if the crypto traders are not able to be not trading traditional markets, then they will just be trading altcoins, right? So they will be putting it into these kind of crazy altcoins, but it's not going to last. that's basically what. But if you manage to get a position here, I mean, congratulations, you know. you've made a ton of money, more money than somebody would have been trading bitcoins, of course. But yeah, like I said, it's not my thing. It's not my. There's not enough liquidity. So most of the times I don't really care about it. That's the biggest problem, right? When I need to have a lot of liquidity before I can trade it, and I also think about it long term rather than short term. And most alts, yeah, it's very hard to be thinking long term. So yeah, I think yeah, I think that covers everything for today. We are nearing the 1 hour, so then my voice gets a little bit raspy, so I'm gonna call it a day. Let's wrap it up. I've put in some scam orders. Not really sure that it will hit. I don't think it will hit, to be honest. But those are the kind of areas that I'm still looking at to be shorting. I do think that we will have a pullback next week, but let's see how things go. Tomorrow, well, I'm not trading during the weekend, so tomorrow we have a more clear plan of how things go. We can put a structure. On the very short term, I do think it looks more likely that we have a push towards the downside to this green box once again, so to the 9,120-ish area, and then most likely back a push towards the upside once again, because it's weekend. I don't think it will be breaking. If it does break, then of course that will change a lot of things, but I don't think it will be just breaking just yet, with the trend not having that much power or energy. But yeah, I do believe that next week we will have a more big week than this week. But I've been saying that for a while as well. But no, on all seriousness, it's mainly because of the volume structure. It's really getting there, right? So if we are taking the volume structure here all the way down, it would be around the 20. Yeah, 20 of July is basically the apex. 20 of July is the apex, so you can see there's so little space right now. So yeah, next week is our big move. So will the big move to be towards the upside? It's possible. That's a possibility. Will it be towards the downside? That's a possibility as well. Higher probability in my opinion. But as a trader, we should not be really caring about if it's going towards the upside or the downside. We should just be trying to be positioning ourselves properly so we can benefit from that move, right? So next week is going to be very important, and we want to be making sure that we get the trade on the right side. Let's put it like that. All right. So yeah, thanks for you watching, and thanks for joining in once again, Hardcore Crew. Salute, and see you guys tomorrow. 7:30 p.m. UTC +8, same time, same place. And until tomorrow, of course, please stay home, stay safe, and of course, stay COVID free.